Do you really draw supports and resistances like this? Honestly, there are better ways to do it. This is a bit messy and it's really difficult to trade well in a chart like this. In this video, let me explain the proper way to draw support and resistance and how you can trade with it in a ranging market. Let's start. Hello everyone! In this video we're going to see how to properly draw support and resistance in a ranging market like this and how to trade it. First thing we are going to do is to find the highs and the lows in the chart. Here we have a high, right when it changes direction. Then we have a low, another high, another low, a high, a low, a high, low, high, low, high, low, high, low. As we can see, there won't be any perfect straight line along the chart, and that's why we don't recommend to draw lines as we saw at the beginning of the video. Instead, we will draw it as a zone. That zone will be very useful to trade and to know how to establish our stop loss. So, how do we draw the zone? We are going to the first high and we are going to establish the zone from the body of the candles that conform the high until the highest wick. Here in the left bar, we click on rectangle. We draw it approximately and we extend it to the right and left. This is our resistance, and now we do the same with the support. If you want to do it to the exact price, you can check the value of the candle up here and take it into account to draw the zone. We see in this one that it broke the resistance zone but came back in the range right after it went above the resistance. That's what it is called a fake out, and it is not considered as a break of the structure. There is no blank space such as here, here, or here, or here. The way of trading this range is to go short when price is at the zone of resistance and long at the support zone. When the candle approaches the resistance zone, it is better to wait and see how it reacts when it touches it before placing a trade. We can see there are 2 wicks implying a rejection of the zone, so we can enter. We say this to avoid possible fake outs like in the previous example. Here we might think that this is a breakout of the resistance, and if we enter long without waiting for the proper continuation, we are trapped because we have not been patient enough to see the reaction in the zone. Here there is no touch of the support, so we wouldn't open a long position, and after that we have the previously mentioned retest of the resistance zone. Here we can see that the candles never break the support zone, and we have another good opportunity to open a long trade. Here we have another touch and rejection of the zone, as is indicated by this wick that has been formed. It goes down and we see a similar pattern here at support. So what do we do now? We go to the left bar to calculate the risk to reward ratio of the trade. we click on long position, and before the possible entry candle forms, we anticipate it and calculate the entry, exit and position size of the trade. We place the entry at the support zone and the stop loss a bit below the lowest part of the support zone. We set our take profit in the resistance zone or a bit lower, just in case it doesn't arrive to exact price of the resistance zone. We can see an example of this here. It is a good trade, but it doesn't touch exactly the resistance zone. We can see that the risk to reward is more than 4. And that is something we can repeat 1, 2, 3 and 4 times on winning trades within this range, and only for longs. The same way we can do this also for shorts. For example, here in this resistance zone. We set our stop loss here and we have a trade of around 4.5 risk to reward. Let's lower the entry just in case we wait for the reaction in the resistance zone and want to be more conservative. In this case, we have a 2.5 risk to reward, and you can do that every time it touches a support or resistance. A support or resistance. As you can see, we are on the 1 hour chart, and in the span of 2 weeks there are several entry points for longs and for shorts that end up being profitable trades. And that's it for now. We will be covering more of support and resistance in the next video. See you soon!